Isn't it about getting the incentives in the right place? Kiwis put all their money into their houses. They buy second houses, third houses if they can afford it, rather than investing in our companies and things will make us grow. We're not going to get rich from buying and selling each other's houses, are we?
And we are not going to bring in measures that are going to push property values down further. It shakes the confidence of the consumer, of households, and the more important immediate effect is going to be the many small businesses in New Zealand whose overdrafts are secured on housing, whose value is dropping. And if we're going to bring in a capital gains tax now, you're sending a signal to them that we're going to do our best to keep those property values down. In fact, we're bringing in something that guarantees they'll go down further. I think it couldn't be a worse time to interfere with what's going on in the property market and make it worse. I mean, we are potentially headed for a significant credit crunch for small business in New Zealand, and depressing property values will make that worse.
OK, well, what should we do about that liquidity crisis? Should the Reserve Bank be cutting interest rates?
Well, I'm sure the Reserve Bank will end up cutting interest rates further. It's just a matter of when and how far. And when you see central banks around the world executing coordinated cuts of 1%, then I'm sure that weighs on the Reserve Bank. The calculation they're trying to make is the same as everyone else. How much is the overseas financial markets turmoil going to impact on New Zealand? So far, we're actually just dealing with our own recession, which actually started back in February or March of this year. And they've been, up till recently, a bit cautious about taking the view that the economy is going to go through the floor. So look, the Reserve Bank makes their own decisions. Our job is to get on with the measures that are pervasive, that are going to strengthen the economy.
And what are you going to do? Are there any short-term measures that you would make if you came into government, would have to open the books up again and say, look, we can't go through with a set of promises, or we have to introduce some emergency measures? I mean, are there any headline ideas that you've got to actually get us out of this mess?
Well, look, we've just presented a package that's a $15 billion stimulus to the economy. That's very significant. It's going to help. It's going to put money in the pockets of everyone. It's going to improve the incentives across the board. You know, a lot of these so-called big ideas are highly targeted at particular small groups. For instance, incentives for people to come back from overseas. Well, that might benefit a very small group of New Zealanders who are going to arrive back in the next 12 months, but won't have any material impact on the economy.
So it is business as usual, as we said in the intro, really, from you?
No, it isn't. And I think there's a misjudgment where people are looking for nice sounding ideas, but our job is the prudent and responsible management of incentives and the prospects for growth across the board. And that's why, much as people don't regard it as sexy, further investment in infrastructure, doing more sooner, affects every single business, every single household, and that's why we've given ourselves the room to do it. Our Labor say it's reckless. We don't. We believe it's vital, and actually it'll help soak up a lot of the unemployment that's coming out of the construction sector, which is, you know, parts of which have just simply gone dead. Another pervasive policy here is around regulation. We've developed these complicated overlays of regulation from good times under a government who thought there was a rule for everything. Now, those are things
we know your position on regulation. I just want to ask you before...
But it's not good enough to say, it's not simply not good enough to say these things don't matter. They do. They affect every single business, and some rinky-dink scheme that might sound good on the news isn't going to help the business who is dealing with the challenges of the Building Act, the Resource Management Act, you know, the rules that have got as silly as telling us what kind of shower heads we can have in our homes.
All right, I'll leave it there. Back to you, Rawdon.
Time now for the panel to have an opportunity to have a few questions as well. Vernon.
Yeah, Bill. On Monday, John Key said that you'd reduce the size of the tax package that you were going to bring in by a roughly $2 billion as a result of the economic crisis around the world. Where would you have made the cuts to be able to afford those?
Well, there was a few adjustments to it around the top tax rate, around the rate of adjustment in the middle rate, and then we produced the package which we believe is a good balance between helping people through a recession and lifting our prospects for economic growth beyond that by improving the incentives people have. As a result of this package, 80% of New Zealanders will end up paying 20 cents in the dollar on their marginal dollar, and that's pretty good.
But previously you'd said that it was going to be a neutral package vis-à-vis Labor's, that you were going to find the savings somewhere in order to do the tax cutting. Where would you have made those savings to pay for that extra $2 billion in tax cuts?
Well, look, I think that's getting a bit hypothetical at this stage. I mean,
but you had the package in place up to Monday, didn't you?
Yeah, well, look, the challenge ahead of us, though, I mean, I'm not going to go back into all the versions of the package that we looked at, because there's a much bigger challenge ahead of us, and that is the possibility of this financial turmoil flowing over into New Zealand. And we think our approach is a good balance. We're getting, you know, some people say we didn't go far enough, because people want some kind of hairy-chested push. Other people saying we went too far. Well, we've got to guide this through, you know, with broad political support and sound attention to lifting our economic prospects.
Bill, your package reduces Labor's projected deficit of 10 years by 1 year. Are you really comfortable with a package that has deficits for the next 9 years?
Well, we're not comfortable with the opening of the books, and bear in mind they were opened last Monday. We produced a package on Wednesday, and as we said then, we've made a start, which is a lot better than our political opponents who have known about this for months, accused National of being reckless for proposing a bit of borrowing, and then turn up with a 50% increase in government borrowing. I mean, how can you trust people like that? So we've made a start. If we become the government, we would want to pull those deficits back. But I'd have to say, from the history of governments coming out of government books and recessions, the thing that has the most impact on the government's books is actually the rate of growth coming out of the recession. And the Treasury forecasts around that aren't that good. And we would need to work hard to lift that rate of growth, because that is the thing that will have the most impact alongside controlling government expenditure.
And I get the impression that you think the way to do that is to lower taxes rather than cut spending and get the deficit back into balance quickly.
Well, look, let's just keep the government spending in perspective. Labor in the last budget set out some budget allowances which were less than half what they have been spending in new money for the last 5 years, less than half. So the civil service is already quite clear there is going to be real restraint. Now, that hasn't even started yet. Labor's still out there promising pay jolts, buying high country stations. None of the $1 billion package they did with the Greens aren't even included in these figures. So just living within those much lower spending allowances is going to be a real challenge.
The fiscal update mentioned two big social outlays that Labor have introduced that are having a higher uptake than Treasury expected and contributing to the present deficit. One was KiwiSaver, the other was free childcare for the well-off as well as the poor. What's your attitude to the second one?
Well, look, that's part of people's security, sense of security going into a recession, and we've made it plain that we are not going to remove, pull the rug out from under them. So working for families, the 20 hours ECE, national super at 66%, those are all going to stay in place. And we don't see a compelling economic reason to cut those back, but more importantly, we believe people need a sense of economic security going into a recession, and we have to focus on the growth-promoting policies that will be needed over the next 3 to 5 years.
Bill English, some economists are saying the government, whichever government we have in the next 4 or 5 weeks, should keep its options open until they open the books up early next year, and then, after the banking crisis has time to settle a little bit, and then make decisions at that point. What sort of flexibility are you going to be offering if you were the government in that situation?
Well, if the outlook alters significantly, then we would keep to the commitments that we've made, and John Key will be making some more of those commitments today at our campaign opening. Keep to the commitments that would be made, and I think any change in outlook will simply give a stronger sense of urgency to policies that are going to help this economy lift its growth rate as we come out of a recession. But people need a sense of security on the one hand, and the confidence the economy is going to pick up. And I think there is a growing sense of urgency, and that's a good thing.